Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and thanks for spending a bit of time with me on your Sunday evening. We'll spend about the next hour talking about the valuation of the market. I try to do that each week, so we do a pulse check of where we're at using the Buffett indicator as well as the Shiller PE ratio. We're also going to talk about the real earnings growth of the S&P 500. We have a big week coming. This is the start of silly season. It's the start of earnings, and that'll begin in earnest on Wednesday. We'll get some transports, mostly big banks, the money center banks. And then we're going to talk about the futures action. In fact, we'll go to that first, the futures action. And then we'll go into chart requests. I have a couple of requests from members. I will go over those. Nestor and I think John, one of our members from New Zealand. Okay, so let's say hello to people. Where do I put my cat? I don't know. Trader Isaac. Denny, hello. There's John on. Hey, John. Mr. G. Larry, surprised to learn that Ronkonkoma is home of the Demon Knights Motorcycle Club. Bad dudes, Bob. Don't crowd them. I won't, believe me. Franklin, good evening to you. Nestor, hey, Bob, I requested VIX calls. I saw that, Nestor. You're on my list, pal. Westlaw. All right, I got a spammer on here. I got to get rid of this guy. All right, adios, my friend. It's the first time I ever did that. McHarder. Hey, Bob, I don't like to speak my book, but I had salmon, carrots, and McNutch. I don't know what that is for supper. It sounds good, though. I had salmon today, too, lox. JW, $50 a pound, $50 a pound for lox. What happened there? JW, RSI divergence on 4-hour NASDAQ, Russell 2000. Oh, check that out. McCarty. Cena, hey, hello to you. All right. Big Bear. How you doing, pal? Happy Sunday to you. RL. RL, you're Stony Brook grad? My son goes there. Very, very good school. Okay. Let's begin with the futures action. We had a very strong close on Friday. Let's go to equities first. Russell 2000 opening down, flat for the most part. It's probably going to be a quiet Monday, Tuesday. Then Wednesday, things will begin to ramp up. The NASDAQ 100 down slightly, 0.15%. No great shock. It was a very strong close. If you take a look at the 15-minute chart of the NASDAQ going into the close on Friday, it was pretty strong. I have a short on of Microsoft. I'm short naked calls with the 260 strike, so I may have to manage those. NASDAQ 100 we did. S&P 500. Okay, so we have a bit of a reversal bar here at the open. 4-hour chart. All right, no new weekly high yet, but it's very early. S&P 500 mid-cap sector. It is looking okay. It's down but a bit flat. Inverted head and shoulders setup, possibly forming here. Sloppy one. I think I'm reading into this too much. The S&P 500, the S&P mid-cap 400 is looking very, very good as a watch this coming week, as well as the small cap value, not the small cap index, the small cap value 600 looks very good moving into the new trading week. Let's take a look at who brought up the divergence 4-hour time frame on, I think it was the NASDAQ. Let's check it out. Yeah. I get it. You're seeing this same pattern form on Microsoft as well. Last I looked, it was an hourly time frame. You can see here that on Microsoft, very overbought, very strong RSI, but while we're putting in higher highs, we're putting in lower highs on the RSI. But there's still more fuel in the tank here. Back to the NASDAQ 100. I think it's more pronounced here on the NASDAQ where you have higher highs, yet RSI is breaking down. So a very valid point. Thank you for pointing that out because I probably wouldn't have spoken about it. Thank you for bringing it up. Looks like we're catching a bid here on the NASDAQ. Still down, but coming off the lows. Let's go back to a 4-hour chart. I want to take a look at the dollar. The dollar had a very rough week last week. The dollar is up. 92 is critical support for the dollar. Excuse me. If we're talking about the dollar, we want to take a look at gold. Gold is down slightly off of resistance. $15-minute time frame. We have higher lows here. Gold sold off a little bit in the back half of the week. The miners had a very good week last week. Whether it be silver or gold, we're long of both. Talking about silver, excuse me. Silver down as well, slightly. But nothing much to worry about here. I have call options on the GDXJ 47 strike. I'm hoping that we just vacillate around here. I think they're going to get called away from me. They expire on the 30th. I know Franklin's on. A couple other folks have the 23rd strike covered calls. So hopefully they expire worthless. Okay, gasoline, strong. You could argue head and shoulders setup, left shoulder, head, right shoulder. Neckline was breached, but it bounced back. So let's watch this. In fact, it's so important. I want to set an alert. Okay. At or below, we're good to go. Let's move this down a little bit, give it some room. Yep. Okay, good. Oil. Crude weekly chart. A very nice consolidation. Energy took it on the chin last week. Take a look at this consolidation on a 4-hour time frame. I think oil is going to be a buy this week. Multi-day consolidation across this tripwire here in yellow. So all I care about is, do we break out? I'm going to set another alert up here. And I may not buy oil, but there's like a 98% correlation between oil prices and energy. Energy's pulled back, so we may look to buy the energy stocks if oil begins to break out. I know Norris. I don't know if Norris is on. He's long of Exxon. I know he's interested in other energy plays. So we'll be focusing on energy this week, in particular, if we get a breakout on oil. And we're good to go. I went over silver. Let's check out ag. Ag is pulling back after a big spike, 2 weeks in a row, big spikes. Soybeans, breaking support. 4-hour time frame, soybeans have broken support. We've been here before. They rallied back. Let's watch and see whether or not we get one of these gamma squeezes. The VIX, Nestor, I know you're out there. All right, so I like the VIX. I don't like the weekly close. I'm speaking positively about the VIX on a very short-term time frame, meaning the 4-hour chart, because what we're seeing here is that, yeah, they did a washout on Friday. They did rally it back. And what we're getting here are higher lows. There we go. So for those not familiar with the significance of the VIX, normally the VIX trades like 85, 90% of the times inversely of the S&P 500. So if you get a rally in the VIX, expect a pullback in the S&P 500. And I'm going to talk to you why. We need to be very, very aware of what the VIX is doing all the time. It's one of my primary charts. Here, it's my go-to chart. One of them. Always in the lower right, my VIX. And what we're looking for here is a breakout on a 4-hour time frame. So while it looks encouraging right here, right now, that we're probably bottoming out a bit, we are at multi-month lows. So that means we can go lower. We're probing support right now. It's looking good. I'd like to see a breakout on RSI and, of course, a subsequent breakout on price. So VIX, very short term, possible bottoming action. I would expect the VIX to stay subdued Monday, Tuesday. Why? There's no earnings. Wednesday that's Pimp Mac Daddy Day. That's when all the earnings begin to flow out. So it's going to be big bank week this week, some transports, some retail. Next week, regional bank week. And then you get all your technology stocks that come out, your beta names, yields, or bond note. This is the bond note, not the yield. So the note is down slightly, which means that yields are flat with a bias to the upside. But to be fair, I should point out that yields broke weekly support last week. They did rally back, but they did close the week down below a support level. So in my mind, I think that so long as we don't shoot up higher, we can see the market move up higher from here. And the charts I looked at over the weekend, it gives all appearances they're going to try to spike the market. But more on that in a moment. All right. Let's go to the... If we have time, I'm going to circle back from an hour from now. We're going to take a look at how we've settled down. Have we weakened? Have we strengthened? So stick around to the end. And don't forget to smash that like button. Por favor. All right. Let's talk about our sponsor, TrendSpider. Folks, don't settle for ordinary trading software. Automated technical analysis at the click of a button. Automated. Automate your grunt work, speed up your technical analysis, and improve your accuracy. Reduce costly analytical mistakes and find winning chart setups with their scanners. And timing your trades with your precision. I'm going to show you how to do that with the alerts. I use them all the time, so stick around for members chart requests. Go over to their Explore page using the link below. Take a 7-day free trial offer. Watch the demo. They have TrendSpider University. You're never left alone. They will walk you hand in hand through your learning process of how to use their product. You're not relying simply on videos. They will walk you through verbally. So they're very good guys. I know them very, very well. I'm just not a guy that applied to be an affiliate. I know these guys. I met them, their management, their founders. At the Chartered Market Technicians Association, I've appeared on many of their podcasts and their, YouTube videos that they do. So, TrendSpider, 35% discount code using my link below. Let's get to the valuation of the market as we proceed into the new trading week. Bob, you have 50 watching and only 12 likes. Yeah, that hurts. Can you folks please smash the like button, please? I beg of you, please. Thank you very much. Thank you, Franklin. Hey, Falcon, you got it, man. All right. Schiller PE ratio, moving into the new trading week, we are at 37.09 on the PE ratio, the highest since immediately thereafter the .com crash. The air was coming out back then. Here we are right back again. Using the Buffett indicator. They need to update this chart because they have a 2 standard deviation. I guess they never drew a 3 standard deviation line in the sand because they never expected to have it reached. Well, we're there. We're about 3 standard deviations extended beyond fair value. So this is a market that is extremely pricey. And when you take a look at the valuation relative to real earnings, I mean, they're just falling off of a cliff. So you really need to have a strong earnings season here. And it, of course, begins on Wednesday. Economic data that was released last week. We had factory orders, big miss. ISM, to be fair, beat. Job openings, good amount of job openings. That was a beat. Trade deficit, who cares? All it does is go up. We had the FOMC minutes, very dovish. However, Kaplan, Powell's going to be good Kaplan, another Fed governor, is going to be bad cop. So he's going to counterbalance the Fed chairman getting us primed, getting us ready for rate hikes next year. What else do we have? Consumer credit. This was just a mind blower. The prior read was no growth in consumer credit, meaning the usage of credit cards. The expectation was for $5.5 billion. The actual $28 billion. So a lot of spending going on out there. And that's what's been, the absence of that spending has kept inflation at bay. Now that we've printed all these dollars, this spending is chasing far. Remember, we haven't been producing anything. So there's a lot of money chasing too few goods. What happened to prices? They go up. Just look at the stock market. Look at real estate. Look at food prices. My lox this morning, $50 a pound. Crazy. I had really good bagels today. Really good bagels. My kids are home from college. Thursday. Thanks for those likes, folks. Appreciate it. Thursday, a huge, horrible number on initial jobless claims. Terrible. And on Friday, this was bad. This was really, really bad. Producer price index, the expectation was for a rise for inflation of 0.4%. We got 1%. We got more than double the expectation. And then we had Kaplan come out again, throwing cold water on the fire. This coming week, and it's really not going to matter this week that much. The economic data during earnings season, it kind of gets ignored, but we're going to be watching it here. You have, don't even worry about the federal budget. We haven't had a budget in years. Nfib Small Business Index, keep an eye on this one because the small caps, of which we are short, have been lagging. Take a look at the weekly chart of the small caps. So they're weakening here relative to the S&P 500, which has been powering higher. And when you break out the Tues, they're powering higher as well. We're nearing all-time highs. I may need to stop out of at least a portion of our short position here on a new high. So small caps weak. So this report is going to be important on Tuesday. Then we get core CPI. This is the consumer price index. We had producer prices last week coming in hot. The question is, are businesses passing along inflation to the consumer? This manipulated government number may or may not reflect it. All you need to do is watch the charts, right? Take a look at lumber. You want to know if lumber prices are going up higher? Look at a chart. You know, we've been talking about where is it? Lumber. I forgot the symbol. I don't want to bore everybody here me looking for this. Here, let's pick out soybeans. Let's go to a weekly chart. Soybeans are very important. We're flirting with multi-year highs, and this goes for all the ag plays. Lumber is way past all-time highs. So we have plenty of inflation. We don't need the CPI to tell us that we have inflation. All I need to do is go to my bagel shop, and I have a lady that warns me. I ordered a half pound. She warned me, listen, it's now $50 a pound. Do you really want that much? So look at your charts. Go to the grocery store. Go to the gas pump. It's for real. Look at the stock market. Go to Home Depot. Randy, you're right, man. Go to Home Depot and look at the price of plywood. No doubt about it. Absolutely. Bob, CCIV looks like a Bollinger Band squeeze is starting. We'll pull that up, Big Bear. Lindley McGinnis, how would you play VIX if you were thinking it may rise to 19 to 20, i.e., what's the best way? I would wait for, because you've had weekly breakdowns below support. Let's talk about it. Let's bring it up. Picture's worth 1,000 words. And we have members that are long of VIX contracts right now too, so this may help benefit them. So the thing to keep in mind here about the VIX is that, we had this big gap up the week of the 24th of February. That's when the wheels fell off the market. So all you need to do is kind of go back in history and take your crayon out and do what we did back then, because we were bearish. We were short the market using puts on Amazon, because I couldn't believe the market wasn't reacting to such a supply chain disruption that was definitely going to happen. The market still kept going up until it didn't. It stopped. So what we want to do is we want to take our crayon out, play connect the dots. What I think is going to happen here is that we'll probably get some good earnings out of the banks, because interest rates have gone up, and unless they're seeing rising delinquencies requiring them to bring up their loan loss reserves, they should do okay. Unless, of course, they took losses as well on their trading operations. But with the 10-year yields rising, their NIM, net interest margins, should do well. That should bid up the market if, in fact, they don't have loan loss reserve requirements they have to lift up, or they haven't taken losses on their trading operations. So what that allow the markets to do is to find another leg up, large caps, and it'll drop the VIX probably down here. There is a support level that I don't have represented here, and it's right here. And it's right where we closed last week. And you could see it was support way back here in 2019 several times. Excuse me, it was resistance. Resistance, not support, back in 2019. Now it should act as support, but it may drop down. If we get good earnings data, expect to drop to 15. Watch for a bullish reversal bar off of that level, just like you had back here. See this breakout? The week of the 27th of January, we dropped back. Then we got another reversal bar yet again. Then it was off to the races. So let the market tell you when it's time to go back in the water. Don't hope. Hope is not a strategy. Wait for the market to send you a signal. So just because it hits 15 doesn't mean it can't hit 12. I don't know, Nestor does not want me saying that right now. Those are the last words he wants me to say, but we want to be honest with ourselves. If you're looking to enter a position, you want to see a reversal bar. You want to see a breakout. Then begin looking to get long of the VIX. Right now, we're probing a bottom, and we're going into earnings season, right? So we want to be very careful, very, very careful. We don't want to get hit with the gamma squeeze. Daily chart of the VIX. I have to say this. I was surprised with Friday's down day because we had a doji formation on the 8th. And that's usually a sign of trend reversal. It doesn't have to happen the next day, but within 3 trading days, it's got to happen, or else it's just muted, negated. And I was also surprised here on the 5th and the 6th because here was the 5th. We closed up. We had the VIX closing up with the S&P 500. Normally, like 90% of the times, that doesn't end well for stocks. And yes, the next day, we were down on stocks, but it didn't last. So we rallied off to new all-time highs, in fact. So we're looking for signals on the VIX. We don't have them yet. We may see some strength this coming week. We're just not sure. I think it's best to wait for a reversal bar, a sign of fear, because we're certainly looking at the S&P 500. We are not seeing institutional demand buying up stocks. This is the retail investor helped along by computers. How do I know? Look at these gaps up. The retail investor is not gapping up the futures market. That's not happening. Those are your algorithms. Those are your computers gapping up. And you have people, they're taking their stimmy checks and they're buying the market on new highs. This is not institutional accumulation. This is not. All right, did I answer questions? Hey, Rick Roofing, haven't seen you in a while. Oh, you didn't buy the calls. Good. Sam, do you think some of the big banks could be affected by Archegos? Yeah, so I was looking into that. I was going to talk about it tonight, but I'm not fluent enough with the dynamics because I was taken aback with how they leveraged up because that's a family fund. And what apparently they did is that they shopped around their collateral to several banks. So basically, let's say they had a $100 million piece of real estate that they put up as collateral with Credit Suisse, which was affected. They also put up that same collateral with other banks. And the question is, who's going to have dibs on that collateral if and when that fund blows up, which it did? So the question is who has counterparty risk, and B, who else is doing it? How widespread is this? So this could be a bigger problem. Maybe it's just a singular problem. There may be more of a cancer out there that we don't know about yet. So stay tuned. More to come on it. I just want to get more educated on it first before I speak about it publicly. Bob, make sure you read the comment from the video you posted yesterday. All right, we'll do. Okay, let's get to it. We went over, we have on Wednesday, the big banks, folks. Wells Fargo, JP Morgan, Goldman Sachs, a couple of retailers, Bed Bath. Then on the 15th, more transports, Delta Airlines, PepsiCo, more big banks, Bank of America, big bank week, Citigroup, U.S. Bank Corp, Charles Schwab, materials, Alcoa, more transports, PPG Chemicals. So a big week coming up. More banks on Friday, Morgan Stanley, a big player, more transports, Kansas City Southern, Bank of New York Mellon. So get ready, buckle up. Wednesday it begins. I would expect a lethargic market on Monday, Tuesday with a bias to the upside. But come Wednesday, that's when the rubber meets the road. And keep in the back of your mind, if you see, halfway through the period, that earnings period, that earnings are not meeting expectations, have this in the back of your mind because this is only going to go up. All right, let's take some chart requests. All right, the VIX, we'll go. I already did the VIX. Joe, isn't that coffee? Yeah, all right, cool. I'm not losing it. Okay, Joe. All right, so this is an intraday chart. Let's pull back to a monthly chart. Very, very nice. Nice tight Bollinger Bands. Is this optionable? I'm looking for opportunities to, yeah, it is optionable, to diversify. What we've been doing of late is rather than putting on new long short trades is kind of go more market neutral by selling premium, selling calls and puts, mostly by vis-a-vis using strangles, the strangle strategy. And we're generating cash flow. We're not buying options. We're selling them for premium. So I'm looking for opportunities other than equities. I like Joe here. Let's go back to the monthly chart. I love the formation at this volume shelf. Very, very solid support. I can pretty much guarantee I'm going to be involved with this, either long of Joe or by selling premium. I just don't know how liquid those options are. So I'll take a look at the liquidity and we'll determine which way we want to go. But we're in a trading range between $35.62 and $40.78. RSI trending up higher, no breakout yet. You know, technically, we do have a breakout. We have a breakout from back here in January. We broke out higher. Now we're pulling back, doing a retest, and it's holding for the month of April. Weekly chart. A very nice week last week. Bullish key reversal bar, off of support. I'm going to set an alert here. I want to know if and when we touch this support level, keep a little bit of sensitivity on. We'll keep this active for a couple of weeks, and we're good to go. What's the alternative play? A breakout. So what we want to do is identify resistance right here. And I want to know, no sensitivity. All I care about is a close above that breakout point. All right, so the game plan here would be open up with a tight stop, not too tight of a stop. Open up at support here at around 35.62. That way you can put a stop loss right below the week of last week's low. Then add more on a breakout above weekly resistance. That's the play. Daily chart. We're doing a little bit of a tug of war on a daily time frame, trying to break out. It's getting rejected. I would have no problem with anybody wanting to open up a small position right here, right now. Scratch the itch. Stay very, very small. Test the market. Look for that pullback to support and or a breakout above resistance. But stay very, very small right now. Then once you get that breakout, game on. What else do we have? Oh, let me go through. I got to go back to the members area for a second. Sometimes I get last minute requests. No, none today. Okay. So how much time do we have? We have about 16 minutes. All right. What else do we have? Requests. I'm looking for requests. U.S. Concrete. GDXJ. We're long on the GDXJ. The caveat, though, is that we sold covered calls on it at 47 strike. And I think they're going to get called away from us. But we are long of NUGT, which is a leveraged ETF, putting along on the gold miners. So we still have exposure here. I like the GDXJ. It had a very, very good week last week. We are in a seasonally favorable period of time. Going back to this is hour of the day. Monthly. Okay, so you can see the first quarter, this goes back 7 years. The first quarter is pretty rough for GDXJ. Then when April hits, it's one of the best months of the year. May's okay. Then it gets really, really good in June again. So between April and August, that's a very, very seasonally favorable period of time for the GDXJ. So I'm very bullish on it. If I do get called away on those covered calls that I sold, that's fine. I'll sell naked puts at the 47 strike. Ideally, if I can get a good premium. If they move higher, then I'll have to sell at a higher strike price. I'll have to pay up if they get assigned to me. But we'll sell naked puts until the assignment, and I'll take those shares in and remain long. But we still have a long position. I'm bullish on GDXJ. I think it's going up higher. We closed out the day on Friday, second day in a row, above the 50-day moving average. You know, from a weekly perspective, we closed out the week last week above support. I would love to see a pullback and a retest. Ideally, not this week, but like 2 weeks from now. So all of that theta decay on the options allows me to buy back the options, hopefully to profit, and we stay long. What are you doing? Okay. So I'm bullish on GDXJ. Bullish on Big Bear Texas Barbecue. Very good. USRC. U.S. Concrete. Let's go to a monthly chart first. Beautiful breakout in March They're going to try to do a retest of support. Actually, they already did it. We're right there. Weekly chart. So the number to watch is, let's call it $67 per share. Yeah. All right. So here's the dilemma. I would not buy these shares. I like the monthly chart. I wouldn't buy them yet. Because A, it's way too early in the month to analyze a monthly chart and make a buy or sell decision off of it. But I would do this. I'd wait for the breakout. You're right there anyway. And this is really important what I'm about to say. And McCarter, I know you've been watching me for a long time now, so you know what I'm about to say probably. But for those that are new, you haven't watched me before, I'll share something with you. And that is this. You have to wait for a close above this mark. If they gap it up higher tomorrow morning, above, what is this? $67 per share. That does not mean buy these shares. What matters is where we close. Ideally, the closer to Friday, the better. You want to make sure that this time next week, if you bought these shares, that because of a breakout, you did it because it closed above $67 per share. Each of these past couple of weeks, you had people buying way up here at $78, almost $79 per share. The high last week was, what was the high? $71.24. This is your buy point here. You want to make sure it closes above that mark. All these people that bought here, annihilated. They probably stopped out. If they're new, their confidence is destroyed because they didn't wait. They chased the market. They let somebody take parking space up in their heads, and they acted on impulse rather than waiting for the fact. We use a rules-based approach. We do not hope. Hope is not a strategy. And if you happen to get a pullback to this lower band of support here, that's sexy. That's good stuff. This is one I would be interested in. So either A, buy the pullback, or B, buy the breakout and the close above $67 per share. Daily chart. Really nice. I really like the daily chart. Here on the 7th, for those not familiar, this is a raindrop charts, a mixture of volume-weighted moving average and raindrop charts proprietary to TrendSpider. And on the 7th, it flashed this blue raindrop. That's the same type of raindrop, that's akin to a doji star formation or a spinning top formation on a candlestick chart, except it didn't appear here. It appeared here, and it's a sign of indecision. And what happened? Subsequent to that blue raindrop, we moved up higher. So this support level held. I love the support level. So again, we have our alerts set. Ideally, we get hit and we can open up a position at the support level. If not, we buy the breakout. As close to Friday as possible. Look what happened if you would have bought here on the 5th. You got hammered on the 6th. If you would have bought here on the 30th, you would have gotten hammered here on the 1st. You want a weekly breakout. What else do we have? CWH. Oh, Camping World. Daily chart looks great. I haven't looked at this one in a long time. So I want to go to the monthly chart to get a feel for what we're doing here. Isn't this Marcus Lemonis' company? We have a monthly breakout, but we've been here before, right? We attempted a breakout here, here, here. This is why I don't like to use monthly charts too early in the month. The last week of the month, sure. But not this early in the month. So it's nice to see we have a monthly breakout, but it really means nothing right now because we had the same for the past 3 months. Weekly chart. We broke out last week. Good weekly breakout. RSI putting in higher lows. Good stuff. Good close. We have a bit of a volume shelf here at 38.78. That's your resistance mark. So daily chart. Volume dropped off a lot on Friday. I want to go to, I want to validate what I'm seeing here before I speak. I frequently use multiple charts. Horrible volume. I get the feeling that this move up higher is almost orchestrated. It's just a grind, a melt up higher. I don't trust this. You got to, me personally, got to wait for a breakout. I wouldn't buy a pullback here. I would buy the breakout, and ideally a retest. And I would adopt when I look at a chart like this, and I'm suspect of it. I like to wait for a breakout, and then I adopt the 3-day rule. What's the 3-day rule? Breakout day number 1. That's day 1. You've broken out. You've closed above resistance. Day number 2, you pull back. You do a retest of that support level, or you move up higher. Day number 3, ideally you pull back and retest. You'll hold for a third consecutive day, a breakout above resistance. You don't break out and then fail. So that's what I do to try to manage my risk. Now, you do have, to be fair, there are positives here. We do have a nice consolidation. You do have an inverted head and shoulders setup. I am online right now with live streams. This is my beautiful daughter home from college, unaware of the importance of this live stream. Screaming down. Yes, dear, what can I do? Come on in.
Sorry.
Say hi to the world.
Hello, world. Sorry about it. Just dinner's ready whenever you're ready.
Okay, thank you.
See you.
My little girl. So I would be careful here. You do have a lot of resistance above. Wait for the breakout. Ideally, I mean, the sweet spot here, a close above 40.50 per share would alleviate all my concerns. So that's what I would do. I don't like this melt up at all. I know initially I said I like the daily chart, but that was the knee-jerk reaction. We'll save that. I want to see how this works out. In fact, I want to know if we break this support level. Okay. Just to validate my suspicions here, or invalidate for that matter. Big Bear, CCIV, Bollinger Band squeeze. Oh, Churchill Capital. You know, all right. So, yeah. What time frame are you talking about, Big Bear? Are you talking about a daily time frame? So I want to talk to you about beta. Right? When I say beta, I'm talking about the high volatility stocks, the Neos of the world. As long as we get weakness, continue. This is the 10-year yield weekly chart, which broke down last week. As long as we get continuation weakness here, names like the Neos of the world, the SPACs, CCIV, they can all catch a bid. The problem is that if yields move up higher, these are all dead. They're dead. They're going to take it on the chin. I think I have Churchill saved here. Let me see if Big Bear got back to me. Daily? Yeah, I'm not. I wouldn't. You have a narrowing out, no doubt, of the Bollinger Bands. They're not as tight yet as to what I would call a Bollinger Band squeeze. Given the volatility, you know what? Maybe you could see one. I mean, look what happened back here. But this was totally a Bollinger Band squeeze. Yeah, this is one I would say that's lining up to be one. Bob, your ratings just went up with your daughter. Yeah. Yeah, I'm a lucky man. Oh, that's right. Yeah. John, she's got a bonsai. That's right. John's down in New Zealand. He does. He has bonsai trees. Something he pictures of. All right. So, yeah, I could see this spiking up higher, as long as yields come in. You got to have yields come in to have it sustainable. So here's your consolidation. This is your setup. Me personally, I'd buy the breakout, and you're right now suspect of a Bollinger Band squeeze. So what I would do is, rather than watching the daily chart, to get a Bollinger Band squeeze, you need to first see it on shorter duration time frames. Let's take a look at a 4-hour chart. And here you're seeing it. So to validate what you're saying, Big Bear, yeah, you can get a Bollinger Band squeeze on a 4-hour time frame, no doubt. And even, when you take a look at the very, very tight trading range here, I mean, this is like a coiled spring. So this is Thursday and Friday. Very, very net change in price action over those 2 days. A lot of consolidation. Let's drill down to a 30-minute chart. Yeah, look at this. So this is going to rip. This is going to rip. It can rip to the upside or the downside. Yields are going to dictate which way it goes. I think that yields will probably pull back a bit more here this week, and that'll allow Churchill to spike up higher. XRP. Wow. Came back to life, huh? I haven't been watching it since that SEC thing. Man, what a move. Way overbought. This is a monthly chart. Very, very overbought. Weekly chart. Yeah, you can't chase this. I mean, this is nuts. Can it move up higher? Sure. It did it back here. It did it back here. I need to sleep at night, so I couldn't buy this right now. Way too extended for my taste. Daily chart. It was up 115% last week. Doji star formation on Friday. That may indicate that you may get a pullback here. And on that pullback, that's your opportunity if you want to get back in. All right, I'm going to go over we'll leave it off with Expedia and ELYS and Shop. So these are a couple of good names to go over. Expedia, that's a reopening play. I'm not sure what ELYS is, but we'll find out. Shopify, that's taking it on the chin, but I believe it had a good week last week. So let's check them out, and we'll leave off with that. I'll try to circle back to the futures. Somebody left a comment. Who left that comment? JA, ES and NASDAQ are dropping. We'll check that out before we log off. All right, let's go with Shop. I'll go in sequence here. Shop, ELYS, Expedia, then the futures. Let's do it. Shop. All right, so Shopify, I love the company. It's a beta name, meaning volatile. Monthly chart, inside month so far. Would I buy it? No, not in front of earnings. I would not buy it. Weekly chart. Last week, continuation move higher. We had recaptured the week of the 29th support, held it last week. Very, very nice. Very light volume, though. Daily chart. I'm going to create an alert at the volume-weighted moving averages and the EMA averages. They're all clustered together anyway. And I would look for, because what these moving averages are going to do right now is that they'll act as a rising floor if the stock is healthy. If it's not healthy, they're going to break. So I'll set an alert. This is way too much sensitivity for me. Let's narrow that down. That's better. Keep it active for a couple of weeks. Touch, bounce. Or I'd like to see a breakout. Zero sensitivity. 4-hour time frame. Just beware, earnings are coming out, so I'm not a big believer in buying stocks in advance of earnings. So Shopify is looking good. I'd wait for the pullback to the rising EMA lines and or a breakout above resistance. Good volume into the close on Friday. So Shopify looking good. It's healing. It's getting better. EXPE. Inside month so far. We broke out last month, and I mentioned earlier the 3-day rule. This is the 3-month rule. You know, ideally you get 3 sequential months above this resistance level. I think it looks good right here, right now. You might want to wait for a retest of 167.31, give or take a dime. Doesn't have to be exact. That would be a retest of support, which I think is probably going to happen. Weekly chart, very tight consolidation. You do have a little bit of volatility, so it could still pull back here and retest support. I don't know when earnings are. Now, they've been trying to break it out, but they failed. They broke it out here the week of the 15th, unable to hold it. So, I like this support level here. Give or take a dime. Doesn't have to be exact. Scratch the itch on that pullback. Don't get overly aggressive. And then add more once we ultimately break out above resistance. I think Powell's on 60 Minutes tonight. I'm wondering whether or not he said something causing the futures to drop. Daily chart. I would stick with the game plan. Daily chart's telling me stick with the game plan. Good volume into the close on Friday. Treasury Secretary Yellen has been very quiet lately. She's advocating $2.5 trillion in new taxes. She's been a vocal advocate. You're welcome, Martrain. What else? Did I miss somebody? Oh, ELYS. This is the last one. We'll go to the futures. All right, so this is the value right off the bat. I just pulled this chart up. I don't know this stock, but automatically I know I have a wedge formation or a triangle formation? How do I know? Automated trend line, folks. Bam. They did it for me. Let's go to the monthly chart. I want to familiarize myself first to identify where we've been, to signal where we might be going. Monthly chart's a mess. Weekly chart. Here's the automated trend line on a weekly time frame. Click of a button. We had a bearish reversal bar last week. I wouldn't buy this right now. Daily chart, we kind of already went over this. Right? We're entering the apex of a triangle formation. Not the time to buy. If we do hit support down here, in fact, let's overlay weekly trend lines on top of the daily chart. Did it pick it up? Guess not. All right, so I would wait for our support levels to get hit here. I believe that is this right here is the weekly chart. Let's go back. It is. My alert carried through to the daily time frame. So wait for the support level to get hit. Stay very, very small with your opening position. Tight stop right below. I'm not in love with the monthly chart. A lot of volatility here. And this could break. So beware. All right, let's circle back and take a look at the futures market, how we're closing out. Let's go to equities. Russell 2000 is now up. This is a 1 hour chart. NASDAQ losing momentum. Coming off the lows, though. You got to keep in mind that we had a very strong close on Friday. So a pullback right now is no great shock. But what I think could be setting up here is just a flag formation. Now, if we break this support level here, that would be a major problem. Move that up a bit. And we're good to go. I think this is a simple pullback. I think we're probably going to break out. Mid caps, not much happening. Potential Bollinger Band squeeze here. Gold. Weak. Let's check out the dollar. The dollar losing momentum. Remember, 92, very important support level for the U.S. dollar. And we'll leave it off with the 10-year. Actually, we'll leave it off with the VIX. The VIX is up. What's the S&P doing? All right. So that's good. So I think we're just getting a pause that refreshes here. That's all. On the S&P 500. I want to leave it off with bond yield or bond note. Bond note, not the yield. Where the hell is it? Yawn. You're killing me here, dude. That's the two. Here it is. Oh. So the yield of the note is dropping. If this continues, this could become a problem. And you'll want to avoid those high beta names because if the 10-year Treasury note continues to move lower here, because we have broken, right, here's what I'm seeing here. Lower high. And now we have a lower low. It's only a 1 hour chart, but weakness begins somewhere. So watch this, because if you get a spike in yields, it's going to be very, very difficult for the Shopifys, for the Expedias to do very, very well. So be careful. Your value names, which have been, I won't say laggards because your transports did very weak last week, which some have paused, like the small cap value 600. They've paused, but they're looking good. They may rally. So beware here of the bond note. That means that yields are on the move higher. With that, folks, everyone have a very, very profitable trading week. Thanks for joining. Smash the like button. Subscribe to the channel. Don't forget TrendSpider 35% discount code. If you join the Contrarian Trader, you get a free silver and gold level memberships. Everybody be well and thank you. Take care.